Glenn and Thomas in Chicago. Gentlemen, you're sitting opposite each other in the studio. How does it feel?
Feels amazing. I mean, I feel the synergy already. So
I know this is my first time being on with Thomas. It's
yeah,
exciting.
We're in the big boy chairs, so feels great.
Well, now yours is kind of a bigger boy chair than mine. Now it's just Nick sitting here. It was a lot cooler when it was Tom sitting here, sitting in Tom's chair, but Nick's doing a pretty good job.
Absorb the energy. The chair surely can exude those strong vibes.
Absolutely. How are you?
Good. Watching these markets, I think, and waiting for something to happen, much as everyone today, which I suppose is the segue of segues here. It's kind of a day here today. Obviously, we might get a government shutdown in the U.S. We might not. S&P doesn't seem to mind very much. A little bit higher on the day here. What are your thoughts? Is this complacency, or do we just not care?
I think it's complacency. I mean, government shutdowns, they really don't affect the calculus for equity markets when there is government shutdowns. I mean, I know we looked at that chart last week.
We did,
the last government shutdown, the 35 days, that was the longest in history. So, I mean, it's kind of different from most shutdowns, being that they're usually 1, 2, 3, 4 days. You know, they're usually a very quick event. But if we're going off, recent history, the 2018, 2019 shutdown, we might expect a longer shutdown this time. But what happened last time is the market rallied about 9% over that time. So, I mean, equity traders, largely don't seem to care about a shutdown that much.
And much like finishing a 5K or a 10K, we needed to boost the numbers for the quarterly numbers that just closed here, rallying into the close as we end September. So, yeah, I agree. If you look at this wonderful chart we pulled, I think you guys covered it before. Yeah, if we're talking about government shutdown, equity is not where you want to look, because we have enough action going on in commodities and FX markets if you want to play some of those stories.
Oh, we've got the crew to talk FX markets here. I mean, I'm an old FX hand. So is Thomas. Glenn, you're in the game as we speak. So this is going to be an FX heavy discussion. Get ready, everyone. We've taken over and we're going off the books. This is the chart that Thomas was referencing here. He put this together for us last week. We can see the performance of the S&P 500 here relative to the duration of the shutdown. And obviously, the upward slope of this line tells you that the duration of the shutdown and that there are shutdowns is not necessarily a bad thing for equity markets historically. Obviously, this is not the world's biggest data set, so take it with a grain of salt. The sample space here is a little small, but that is also the sample space as it presents itself, and the market is looking at it collectively. So that we look at this and what the markets are looking at, the same thing. And so the presumption likely that we are not going to have anything too crazy come of this, especially since most of these things, even the longest one last go around, they tend to either get resolved at the 11th hour or they tend to resolve before you can directly view any of the impact in the data. I mean, you'd have to shut the government down for quite a while in order to see the data catch up and essentially have that show up as meaningful for employment, for growth, for earnings, beyond, let's say, a blip in a month here or there, where it's clear that there was an anomaly and things will come back. So it's probably not anything the market is terribly concerned about, but I do wonder if it is complacency, because something that I'm always focused on is this idea that if there's cheap money, then all things are okay because you can digest a lot of bad news if you think the money is going to be cheap downwind, and cheaper is probably the key here. That if you think that losing money now is okay because borrowing that money in the future is going to be cheaper than now, well, then you're not so worried that you're going to make a mistake or that the markets are going to give you a weird outturn. And what's interesting in this context, this is the SR3Z6 contract, so this is December of next year. What we've seen really since the Fed meeting, which is right here, is this steady march in a more hawkish direction. So this is, of course, the quote for this 3-month interest rate future. So the implied rate, much as would be bonds and yields, is upside down. So this going down is yields going up. In other words, this is the shaving away of rate cut expectations for next year. And we've lost about a cut out of here. So when we look at this, one kind of thing that has me thinking, yeah, okay, but is the market being complacent, is this increasingly, at least as far as sort of since the Fed is concerned, is a market that thinks that the defenses from cheaper money are being weakened, not strengthened. And so if ever there was a time for the markets to go, oh man, we would have digested this thing without a hiccup, if only there wasn't simultaneously this idea that our ability to digest any which thing is being undermined because the Fed won't give us what we want. So that's really the only kind of lens for me, is I don't think this shutdown is going to be a big deal. I don't think the markets think it's going to be a big deal. But in an environment where the market might be less inclined to digest any deal of any kind, I think that could be saucy. Maybe. Though I think that's unlikely.
And the thing with the shutdown, we won't get the NFP. We won't get other government-funded or published economic data. So, it really works in two ways. You have less clarity on what the economy is doing, but at the same time, those headline risks, you say, we get a bad NFP number or something, that doesn't exist. So in a way, there's pros and cons to look at it. But also, it depends how long it goes on. So, I mean, on OTCL today, we were looking at gold and silver, how they perform during shutdowns. Gold generally performs pretty well. It doesn't do crazy things, but, averages about 1.5% higher during shutdowns over the 18 or something that we looked at. Silver, actually, although we had a smaller sample size for measuring it, silver also performs even better than gold through the past 4 shutdowns. So these assets that hedge uncertainty, they still work well during government shutdowns. So I'm long gold and silver, planning to hold them through at least until we get some clarity on this shutdown.
Because you're right.
I got shaken out of gold right here. Essentially, I ran it up and right around here, I thought, oh, maybe we're finally getting a little soggy. And so I got out, but I stayed in silver. And that has continued to work. That hasn't given the same kind of idea of a turn. And so I'm still holding it. I'm with you. I think there is more in the metals here, it seems, about sort of general freak out concern, be it the shutdown, be it the possibility that the Supreme Court overrules the IEEPA tariffs, which is most of the way that the Trump administration has justified their tariffs. And that's just a messy thing. Like, all of these things just become messy and confusing. And I think that's why sort of reflexively the metals are doing as well as they are, even when you've had yields come in. I mean, obviously, it should be kryptonite for metals when yields come higher, which is what this has been since the Fed, lining up, by the way, with the shaving off of that one cut out of next year's outlook. And of course, the dollar. And I know, Glenn, you're excited to talk about this. The dollar has been rebounding since the Fed. So higher dollar, higher yields should be terrible for precious metals, and yet here they are. So it seems exactly as you're saying, Thomas. This is more like, oh no, weird things may happen, sort of generally, and upend what the markets have been attempting to bake into the cake basically since April, give or take.
Yeah, and I mean, Glenn, you probably have noticed this too. Currencies, I mean, and gold, they're not behaving in the typical way to where what yields are doing or yields between countries. So they're being driven right now or recently by other factors for sure.
Yeah, I mean, if you're a dollar bull, this is the last little wrinkle you want in the mix because, like you've called out with all these charts, there has been a since the Fed storyline that's been clear on all of these charts. And yeah, when you fold in this government shutdown, that really changes the picture fundamentally. Bolsters gold in the same research I did for Bat and Bat. What we've seen under the past government shutdowns, we see the moving gold primarily, and we see a slightly softer dollar, not to the tune of anything ridiculous, but it's not in a theoretical sense. It's never good for the U.S. dollar prospects in terms of choosing a flight to quality assets. That money isn't necessarily going to dollar, not going to bonds, and it's going to these precious metals that are already, top of their historic price ranges. So not good for dollar momentum thus far, but we'll see. What I'm really curious to see about is because we're coming off of the longest government shutdown in recent history, what kind of a duration is priced in? It sounds funny to say, that this is all priced in, but there's got to be some sort of expectation around how long is currently priced in and what would surprise markets in terms of how short or how long. So I think there is, if the how short narrative plays through, there's absolutely a case for dollar popping and metals falling again. But like Thomas brought up, an interesting perspective is, what does a data dependent Fed do without data? The whole month of October, 35 days would put us past the next Fed meeting scheduled for end of October. You mentioned that a cut is already kind of shaken out, but nobody's really saying where, if it's going to be October or December. So yeah, and I think the last point that I hadn't thought of at all was your point to the equity market, Thomas, about the lack of data is only a good thing for stocks, it appears like, because there's only risk to the downside for things like employment and all these other inflation measures because people are still buying the dip. It's that easy.
Yeah.
Well, so if we to that point, I think if we take a look at two things. The first is that notice where the dollar starts to bottom here and kind of starts to maybe not fully kind of engage, but clearly whatever slope of decline was this, and this is the DXY index here, and maybe we can even go to a weekly chart to really see it clearly. This right here is April, and obviously we went into this with very aggressive selling that stopped right around here. And then we had a little kind of follow on, but it ultimately didn't really go anywhere, and we're essentially back to where that is. If you consider what this is essentially where stocks bottomed as well. They bottomed right in here. This is also the spot where gold started to sort of change its behavior. So if we go back here to that same spot, this is it. that this is where gold goes into that long, sleepy range, where from April until, let's call it, August, late August going into September, gold is basically just drifting sideways. In my mind, what this suggests is that whatever the markets got from Liberation Day and the administration's ultimate backing up off that, so they came out, they lifted up the phone board, markets freaked out, sold dollars and bonds and equities at the same time. And then the administration said, hey, whoa, 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 take it easy. Okay. Let's not do all that. Here's a 90-day pause on everything. Let's walk this slowly. And so, and of course, in the meantime, things got diluted, and what the rates were on the phone board are not the rates for the big trading partners. So the can with China continues to get kicked down the road. So what we've learned is that the administration is amenable to market discipline. That essentially, if the markets freak out, they do listen. And so with that, you get then a pause in gold for a while. You get a pause in the bonds for a while. Let's see if we can get the continuous contract here to see this better. There we go. There's the bonds. Again, mid to late April right here. They stall and anchor. And, of course, the dollar. So I'm actually inclined to think that whatever sort of concern about the dollar there was in losing its kind of reflexive haven status, that's over. That actually the dollar is back to being a haven asset, because whatever that freak out in April was, we got the response from the administration, I think, that the markets wanted, which is to say they got scared and backed off. And so the markets are off, I think, this idea that the U.S. is going to cut off its nose to spite its face, come what may, on these tariffs. So that seems to be, I think, a recipe where the dollar is certainly responsive to yields as it usually is, and of course it's attempting to explore higher here now that we have rate cuts falling away out of the outlook as we saw. But it's been trying to bottom since July. And I think that's really more about this kind of idea that whatever the freak out about the structural integrity of a U.S.-based global financial order that there was in April, that's basically off the table now, at least as far as the markets are concerned. At least for the time being. And so I would think that's dollar supportive. As far as those rate cuts go, Glenn, you were talking October versus December. Let's see if I can share this screen with you. There we go. This is where we are on the CME Fed Watch tool, which is just Fed funds futures implied. For October, we're at 96.7% chance that we're getting a cut. So hide your kids, hide your wife. The easing continues. Nobody is surprised here. The interesting thing, arguably, is December, because this has come in a little. So if we compare the way that this has looked, I mean, it's back to where it was for the most part a week ago. So in the immediate aftermath of the Fed, but last week it got down a little. And yesterday it got down a little. So it's not quite as done deal feeling as certainly October. And I mean, October hasn't even budged. I mean, we've been sitting comfortably above 80% for a week now. So that doesn't seem like it's going anywhere. December might be debatable, but it's really the end of next year that I'm kind of the most focused on. This is the chart I keep using for my show for macro money, where you can see for this year we're discounted 36 basis points. So one cut is definitely in, and we're about 11 basis points in the direction of a second, which puts that second at basically a 50-50 shot, give or take. The big disconnect is next year, because the Fed told us they're only doing 25 basis points next year, and the markets have priced in 61.
Yeah.
Yeah, I think the big risk for markets is next year, when after we get a couple cuts, 2 or 3 cuts, you restoke demand in the economy, and then you start seeing upward price pressure, and then the focus shifts: is the Fed going to have to hike rates? I think next year is when the big market break happens on that narrative.
Mm-hmm.
Yeah, because then you start to focus or price in, time into that equation, because there's been a lot of, headlines around what the neutral rate is when we get down there. But now we see that the Fed is going to take its time long enough to maybe get into a hike or cut scenario, instead of just a cut, wait, cut, and solely focus on cuts. So, yeah, I agree.
I don't know if we can hold out hope for a rate hike of any kind, but of course, in the current environment, who knows? It is certainly very choppy, and the news is coming fast and furious. Do you guys have any ideas here on what you want to do exposure wise as we wait for the news to hit? Thomas, are you changing anything? Are you buying or selling anything? And Glenn, are you?
I kind of took a cue off Mikey today. I'm selling a 1-day iron condor in the ES, so S&P 500 between 66.90, 67.30. We've been kind of moving sideways a bit, gentle upward lift, but I think by tomorrow I just see the prices staying the same. I don't think the government shutdown. I think most people already know it's happening. I don't think it's going to generate a big down move or anything like that. So that's where I am with equities, besides for being a little long Tesla. I mean, otherwise, I'm long gold and silver more on the shutdown news.
Yeah, it's hard to have conviction in equities here, but it's one of those things where how long can you say that for, when you're pressing against all-time highs, and you have been all year. So, yeah, I mean, I'm waiting to see, but also challenging myself, how long are you going to wait before taking a direction, or taking a direction neutral strategy like you?
Yeah, and I mean, the S&P 500 today was carried a lot by a big move in healthcare stocks. XLV, the biggest daily gain since May today. So I think it was 2.45% or something, but
2.42%.
Okay, yeah.
But yeah, I mean, to your point,
pretty big
massive move.
Without that, the S&P 500, I think from the weightings I looked, it would be down a little bit today if it wasn't for that. And that was a news-driven headline, with this government-funded pharmacy, that direct-to-order.
Interesting. What are you looking at,
Ilya? I mean, if we take a look at the sector breakdown today, that's a perfect segue, Thomas. The sort of usual suspects that we'd be looking at, kind of soggy. Consumer staples up, but not by much. Discretionary down, but not by much. Energy down by 1%. I mean, obviously, technology is the big sort of heavy weight. That's up about 0.5%. Everything else is kind of meanderish, but for healthcare, where 2.4% is obviously a big thing. Financials down a little bit, about 0.5%, but not really running away from their levels here. Here's financials I mean, you can roughly surmise this is a range. Here's uh, communications, sort of the overlap for tech, not really going anywhere. Here's tech itself, not really going anywhere. The big thing, as you were saying, Thomas, XLV, and that this is episodic rather than kind of a big, broader market story. I'm looking at, I'm pretty long the dollar here. I am also long the bonds a little. So when I was looking at this pullback here in the bonds from this level down to here, I thought this might be attractive risk reward to look for a bounce. So I have a little call vertical against this level here. It's maybe starting to work a little, but so far we're just finding this support and choosing to hold it. It's not like we've mounted any kind of a meaningful rally. In fact, we can see that these levels are kind of running up against where the former support has now become resistance, and we're essentially digesting. So we'll see what this does. And then I still have long side on this on silver, and I'm a little bit short stocks here only because I think the risk reward is better. So if you look at what's going on in S&P here, you've had a 3-day sell off and you're back up into this range top. So either this is a top or it isn't. If it isn't, and the same thing that's been happening occurs, then you're wrong fast and you get out. And if this is a top and all of a sudden, finally, the straw that needed to break the camel's back, that is to say, a Fed that was insufficiently dovish to give everybody the cheap money they needed to forget that there's risk in the world, if that kind of basic underlying thing is getting unwound because the Fed isn't coming through, then maybe this is the real deal. And if it is, then you have a lot more room on the downside than you do before you're proven wrong. So that's really the only logic here. I'm not seeing anything necessarily that says, oh my God, the world is ending tomorrow. This is a pure kind of risk reward. We started a sell off. We seem to take out what was the prior move higher. So if you kind of guesstimate that, okay, here's the last kind of base right here, and off that there was a trend higher, higher highs, higher lows. You made that break last week where this at least leg of the move higher, you could say, is over. And if that's over, then either this is a pullback that's already ended and we'll find out right here, or this really is a top of some kind. And if it is, then it's cheap to find out. Vol is only 15.
Yeah, and I mean, like Glenn talked about, we're at the end of the quarter here, so you're seeing rebalancing. You know, if you're a fund manager and you have an outperforming sector in your portfolio, you're going to trim that. If you're underperforming ones, you might add to that to get your balancing right. Also, you know, this is typical, but it doesn't always happen. A lot of pension funds are heavy investors in the equity market. Pension funds, you know, they get their distributions of capital quarterly. So, you know, they get that at the end of the quarter, and then they deploy that capital in the coming days after the quarter ends. So sometimes that provides a tailwind, so to say, to kind of some of these large ETFs and things that pension funds like to put their money in.
Interesting.
Totally. And this is actually a very big deal because market structure in this sense is something that makes equities a unique thing. Equity markets are notoriously difficult to short in large part because the biggest holders of equity, like pension funds and endowments and things like this, they're never short, and they hold for a long period of time, and they bias the market. It's not a truly two-way market. It prefers going higher because of these structural forces. So very important consideration. here. I mean, these are the names to really look at as far as who makes the equity market do this thing or that.
Ileana,
Russell was a little bit soggier in its positioning. It's made a, let's call it a less impressive attempt at rebounding. Any interest on the short side here, where it looks like we had a break, we've retested it, and now we're getting kind of obviously stuck? Any interest in exploring the underside of this?
Yeah, I mean this looks like something where you explain momentum has come out and now it's meandering sideways. We had the nice run up from August and the Russell, but it's had periods over the since the start of the year where it hasn't matched the Nasdaq. So, if I'm playing a long strategy in equities and trading, I'm probably still going to stick with what works or what has been working versus
Probably a good idea to stick with what works, as opposed to what doesn't, which is what I've been doing.
Yeah, but I mean, I don't really like the chart this much on the long side. I think this is showing signs of exhaustion, maybe a bigger pullback to come if it doesn't quickly reclaim this trend.
it also shows, I mean, it's mirroring a lot of these other charts we've pulled up around the rate cut narrative. I mean, that's the popular fundamental analysis behind this right now.
Yeah, I mean, there's the Fed right there.
Exactly, and I can't say that I'm have done enough research into Russell specific, tickers that would command any sort of confidence in this having a unique characteristic aside from other vehicles to play kind of the interest rate game.
I mean, if you want to just look at it intuitively and say, where are you going to have the most sensitivity to higher rates? I mean, you could say that from a speculative perspective, it's the NASDAQ, only because that's where most market cap is. That's where you've seen the most explosive gains. So if the market is unhappy with the Fed in a kind of global sense, then NASDAQ would be the place that's that has the rubber band stretched the furthest, as it were. But if you were to look at it from a purely fundamental perspective, a lot of those Mag 7 names, I mean, they're so cash rich, they're not terribly concerned if borrowing is a little bit higher. In fact, that probably helps them because it helps to put up a moat around their first mover advantage, especially in the AI space, which is still young, still ample room for upstarts to say, no, you're Friendster and I'm Facebook. And so there's a sort of situation here, probably for the big Max 7 names, where higher rates, do they really care? Economically, probably no. Sentiment-wise, probably yes. But for that, the market has to care sentiment-wise. And at the company level, I don't think the CEOs of OpenAI and NVIDIA and Apple are losing any sleep about this 25 basis point move or that. But when you look at Russell, where you have small cap names that are much more sensitive to the business cycle, I think there it makes sense that you'd have a more rate sensitivity, especially given how many regional banks are in here. If we look at the regional bank ETF, it is, I wouldn't say it's selling off with any kind of vigor, but it is kind of trying to round the top here. So that might help to explain a bit. I mean, not surprisingly, I mean, that's the Fed.
Yeah,
right there.
If your view is that we only get 2 or 3 rate cuts and then it stops, is that enough for regional banks to really, increase their profit margins, things like that? Probably,
and avoid becoming another casualty.
Yeah. Mm-hmm. So yeah, regional banks, rolling over a little bit. That's not encouraging if you're trying to get into the Russell. The Russell also, a good chunk of them are energy, smaller capitalized energy companies. Which, if you're seeing crude oil go down, if you're seeing crude go under 60, that's going to drag. So I'm just really not liking the Russell. If I'm going to stay long anything, it's a technology stock. It's the Nasdaq, things like that.
Yeah. Yeah. That makes sense.
I'm curious, Ilya, going back to your S&P analysis,
Yeah.
you're saying that you'll know pretty quickly if you're bearish a little bit. You'll know pretty quickly when you're going to get out. If you're constructing this trade, putting this thesis to use, what kind of time horizon are you looking at? Are you looking just purely directional using futures, or are you trying to attach some option strategies like Thomas is doing? And
I'm definitely doing an options strategy. I'm definitely doing an options strategy. I'm keeping it simple and directional, but in order to bring down the cost of having this exposure, because I am fighting a market that wants to go higher, as silly as that is from a trading perspective, I think you have to think in risk reward terms. I mean, we've talked heaps here about no amount of episodic tactical short is meant to suggest that, for example, I don't think the promise of AI is what it is, or that the trend isn't up, or that it hasn't been up for a long time. Those are just different ideas. Trading and investing are not the same sort of time horizon. They're not the same sort
100%.
of discipline. And so when I'm thinking about sort of the long arc of the equity market, there's no reason to think that it isn't what it has been for ages. The question really is, are you getting to a place where you're kind of getting a little hot relative, and that gives you some sort of tactical opportunistic thinking. So when you see a kind of attempt at, let's say, a near-term breakdown here, you go, ooh, is there maybe a 10-20% pullback in this thing? Is it maybe the kind of thing where in previous kind of hype cycles around new technology, you're sort of through the picks and shovels hype, and now things need to show some ROI, and there's usually a shakeout there. I mean, obviously the .com bust was about that, but history abounds, from railroads to really the United States itself, and warrants on the colonies and things like this. So this has existed since the beginning of time, this dynamic, or at least as far back as we know from economic history and the history of markets. So that's really where I'm looking for shorts. It's tactical and opportunistic, not necessarily kind of structural and long term. I think betting on Armageddon is almost always a bad idea.
No, I hear you. I was just curious, since this price level, this current level, is so close to what you've defined as, a top
Well,
or
and so
a
this is
breakout.
exactly.
And so I was just curious if you were, at this level, you can think of time as your friend or your enemy. As you start to get into option strategies,
Absolutely,
you would have to construct this so you're not also trying to bet on the timing of this move. And so I was just curious if we're close enough to that price level where a pure directional futures play is the easiest to get in and out of, to know when you're
in
wrong.
my mind, it's more dangerous than is worthwhile. So what I'm doing here is I'm saying, you know what? For me, the time consideration isn't so much, I think this will turn by day X or Y. It's more, I'm shorting a market that doesn't like going down. So I want to have lots of duration,
Right.
to dilute my delta exposure. I don't want my underlying position to be 1-for-1
Gotcha.
underlying delta. So I want to be basically mitigating my exposure. And yes, of course, that also means I'm mitigating it if it goes my way, but that's fine. I can always add.
Right.
It, the market is biased against my view, though, structurally, or rather, my view is running counter to what the bias is. So you got to be careful. So two things I'm doing, three things. The first thing I'm doing is the instrument I'm using is not the futures, it's SPY. And the reason I'm using SPY is because you can get smaller and it's cheaper than even the MES contract, the micro futures. And what I'm doing here is I'm doing a call or a put vertical. The reason I'm doing a put vertical is, number one, I can lock in my risk reward. And number two, that makes this a less capital intensive position. It makes it risk defined. And I already have mine on, but if I was putting it on fresh here, I'd go maybe 59 days out and see what this looks like. Looks like there's, if we just did it at the money right here, and we were looking for sort of the next big pocket of liquidity, maybe we'd be looking at something like this. And you can see you have about a 2-to-1 risk reward here that you've locked in. Now, obviously, this is after hours pricing, so take it with a grain of salt, but this looks fine.
Yeah.
Where, I mean, you put this on and because vol is so cheap, you go, well, okay, so it's 48% probability of profit, but it's 2-to-1 risk reward. So 50-50 coin toss, but if I lose 50 cents, and if I win, I make $1. So, okay. That's a bet I'll take.
Yeah, and I really like the, if you're standing to make more than losing, having the extra duration on is okay, because
Exactly.
Otherwise, if you had longer duration and you miss those trades, you're just keeping more capital tied up to lose more. So I really like structuring it that way when you're letting it be 45 to 60 days out, and you can have a few weeks where you wait for a big move, and you can get out of that trade. Whereas if you waited, time runs out, then it's just a big loser. And you do that over and over again, it probably isn't the best way to trade on that.
Yeah, exactly. I mean, I think when vol is this cheap, and you're adding duration, not necessarily because you want to sit there that long, but because you want to dilute how much it's going to hurt you if event risk pops it, and then you get 2-to-1 risk reward your way. I mean, worst case scenario, this thing runs away on you, but your loss is defined, and as long as you've set it up to be, let's say, 1 to 2% of equity for the overall account, okay, sometimes you lose money. But this allows you to plan all of that ahead and basically say, I can build something here to take a shot without it breaking me in the worst of cases. So why not?
So for this week, I think, assuming this government shutdown happens, ADP data is going to be the big headline event, because the shutdown doesn't stop ADP from reporting the numbers. So the market doesn't get NFP. Now we got to go off ADP. How's that going to impact the rate cut bets? I know the correlation between NFP and ADP, it's been wonky for, I think, at least a couple of years now.
It's been wonky for a while. The ADP is a really, really poor predictor of NFP.
But when that's all we have, it's
that's
all we
that's
have.
what makes it kind of funny.
Yeah.
ADP is to some extent the butt of many jokes of market watchers, because it comes out and it'll be some wild number, and then momentarily the markets go, wait, what? And then the next day NFP comes out and they go, oh, Oh yeah, ADP
That
had
guy?
no idea what they were talking about. But again, who knows? Because I have certainly not gone back and said, well, with the benefit of a 911,000 NFP revision for the 12 months through March of this year, how accurate was ADP really going back? Were they much more accurate because the BLS numbers have been wacky?
That would be funny.
I don't
If
know.
they
But
announce
that
an
would be
annual
funny.
revision of 0. We nailed
Yeah,
it.
well, turns out that actually ADP had it right the entire time. But this is where I think things get into kind of the philosophical for why we care about economic data. We're traders. We don't care about the academics of the data. ADP matters not because it might be a more accurate view of the labor market normally. It only matters because it comes a day before the report that everybody does care about, and that moves markets. And by itself, I mean, the markets don't really care what job creation is. They care about what job creation is in the sense that it informs what policy is going to do, how assets will get allocated in a near-term sense. I mean, of course, markets care about what job creation is going to be structurally over a period of quarters and years. But from a trading perspective, from an event risk perspective, jobs data doesn't matter because it's jobs data. It matters because it has policy implications for the cost of money over the near term. So it's kind of funny that ADP might be more accurate for all I know once you take the BLS revisions into the calculus, but there's no question that the market mover is the BLS number, even if it's wrong.
Right. Well, then looks like this will be an interesting exercise of.
It'll be a very interesting exercise to Thomas's point, because if we don't get a BLS number and all we get is the ADP number, that's going to be a very interesting thing indeed. Anything you guys are doing going into this overnight? Anything you're watching to do? I know I'm going to probably get 90,000 eye rolls here, but I took myself into the world of spot here today, and as I'm liable to do, and I was looking at USD SGD.
There you go. Well,
and
sling in Singapore.
Yeah, and it's an interesting setup, I thought. Let's see if I can find it here.
Should be on
somewhere.
Emerging USD.
Let's see if we can find it here. There we go. So if we look at what's going on here, you kind of get the sense that there is something of a range that's been broken. And maybe you're starting to bottom here, and maybe if then you break about 130 here, then maybe you've got room to run all the way into something like 133. Can I tempt you guys into a little Singapore dollar action?
Yeah, I mean, that doesn't look bad to me. I haven't looked at the Singapore dollar since I was on the desk with you, Ilya, working the overnight hours. But yeah, I might take a little stab. The nice thing is with spot, you can go as small as you want. So you want to get in something, the size is up to you, which that's what I love about spot.
Well, yeah. So what I'm doing here is I'm putting 0.1 here for a 10K lot, which is essentially equivalent to a micro future. So the same relationship as you might have between 6E and M6E. 6E is the full 100K lot. M6E is 10K. So this is 0.1 of a standard lot. And hell, let's do it.
Man, they've got it margined at 5%. What the heck?
Yeah, not unusual, by the way, but that seems about standard for U.S.-based brokers. at this point. But so there we are. I've got it on. Let's see if all of this goes terribly, and if I'm way too overdone being long dollars. That's where I am, though. I'm looking at the euro here today, just by way of reference. This was the break. Obviously, the Fed is right here. So with the Fed, we start to get a turn off this high in the euro. We came to retest the underside and held. So I am unrepentant in my dollar bullishness for now.
I was a little.
I'm short the euro, short the Aussie, short the pound, short the yen. You name it. If it's a counter currency to the dollar, short the CAD. I'm short that as well, and apparently now short Singapore dollars. So that's my big bet here, is that come what may, the dollar is bottoming.
I'm short the euro, short the Canadian dollar. I want to get short the pound. So, I mean, I'm also in the long dollar camp with you.
Nice.
The market that sputtered the most, that's behooved me, is Swiss franc. I mean, Swiss franc getting so much demand now, moving very similar to the euro these days, but
as it does, yeah,
hasn't been able to from a dollar standpoint. I agree with you that the tape action is looking more and more promising for the dollar, but the magnitude of positive dollar moves being so little has been a bit of a deterrent, just because you can't help but take into the context of we're down 10% year to date, and the best news we've gotten all year only moves us 0.5%, maybe 1%.
It's frustrating.
That's cut into. So we'll see. It's looking like if you're a dollar bull, it'll be a bit of a long game. But in terms of entry prices, getting pretty cheap ones across the board, and a lot of opportunities to do so.
And finally, because we were just talking about real currencies, let's talk about fake ones. Ha 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 ha. Here's Bitcoin giving a little bit of help to the dollar positively minded out here, still stuck and still suggesting that we don't have a strong kind of anti-dollar, anti-fiat thrust outside of whatever gold is doing, and obviously whatever precious metals are doing don't seem to be a dollar story because it's not carrying over here. It seems to be its own thing. So if nothing else, crypto is idling, but that it's idling and not surging is, in my mind, kind of encouraging for a long dollar view. And with that, overtime is out of time. Thank you, gentlemen. They will no doubt never let us onto the program together again, because the whole thing is FX and then more FX. So this was nice. Well, let's see if they let us try this ever. Don't go anywhere, folks. I'll be back in just a couple moments here with Macro Money, where we'll talk about the ISM data coming up tomorrow and later this week, which we didn't even touch on today. So sit back, relax. We'll be right back. Thank you, gentlemen.
Thank you.
Thanks.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That would feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever?
Ever.
Forever?
Ever.
Oh, no. I mean, Tom has a hard job. He's got to wake up really early. But he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy, and I live here in Chicago, so yeah.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not, just trust us and do this, which is a very dangerous thing in the financial world. But, learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed.
Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
And we are back. This is Macro Money. I'm Ilyas Spivak, head of Global Macro here at Tasty Live, and we are going to gear up for the first piece of weighty U.S. economic data this week. Obviously, we have a looming government shutdown. Maybe we'll see what happens here, but the markets don't seem terribly perturbed. Nevertheless, this makes this economic data that much more interesting because it comes not from the U.S. government. And so even if there were to be a government shutdown, this data will be coming out and may be giving us a more significant view than normal because we might have this government shutdown and because this might be what we have as far as data goes. So let's consider first how these markets did. And do keep in mind, I take these screenshots a little bit before the show. So there is a little bit of difference in the sort of after hours processing here. This, of course, was taken after the close, but with the benefit of after hours processing, things can be a little bit different. But certainly the thrust of what's there at the close is before your eyes. The S&P up a little bit, 0.38%, mainly driven by a sharp pop in healthcare. Everything else was kind of anemic, and the healthcare story was kind of a one-off. It was sort of a headline narrative. So not really anything materially thematic there. And of course, the NASDAQ soggier for it because that's a smaller component in that index, only 0.22% up for the NASDAQ. Yields kind of a hodgepodge, 10-year yields up a touch, front-end yields down a little bit, crude oil down, but still basically marching to the beat of its own drum and hovering near familiar range levels, not really going anywhere. Gold was down quite a bit earlier in the day, but managed to rebound and squeeze gains into the end of the day. The dollar, kind of a mixed bag here, a little bit lower against most currencies, flat against the euro for the most part. It was down a lot more and erased most of those losses. Still meaningfully down about 0.5% against the yen, but again, less so than was there earlier in the day. The dollar kind of fighting back into the close. Bitcoin steady. Now, if we take a look at what all of this has amounted to, kind of looking at markets as a whole and looking at where we've been so far this week, I think we get the sense that for the most part, we're following a script that has not deviated terribly from what we saw last week and is instead a kind of digestion thing. So here's where we are on the week so far. We can see stocks a little bit higher, about 0.5% or thereabouts, a little bit less for the major indexes. Yields a little bit lower after, of course, rising last week. So somewhat corrective there. The situation in crude, again, looking somewhat corrective. Bounce last week, pullback of almost equivalent magnitude, at least percentage terms wise. This week, gold and the dollar really stand out. Looking at gold, we can see compared with last week, sort of this relentless climb continues. The dollar last week had a little bit of a convincing pop, and now it's pulling back just a bit. But for the most part, the dollar's strength since the middle of the month, since the Fed meeting, that continues to be the sort of near-term default. The trend has been broadly higher since that Fed policy announcement. And what we see in the context of this week so far is a kind of pullback within that dynamic. As far as macro risk overnight, a couple of things hitting the tape to update. Data out of China, this is Purchasing Manager Index data. So as ever, the center line is 50. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. We can see here for both the private sector estimate, this Rating Dog PMI. Rating Dog is the new sponsor of S&P Global's PMI data, but it's still the same S&P Global data. Before it was sponsored by Caixin, now it's sponsored by Rating Dog, just a different Chinese sponsor to publish the numbers. Same series, though, ultimately put together by S&P Global. And then the NBS number is the official government PMI data. We can see for the official ones, we basically are still hugging the neutral line, so not really going very far on the composite index at 50.6. The Rating Dog numbers, S&P Global numbers, they're a little bit more chipper. They're showing a more spirited sort of pace of growth at 52.5. But if we look at the way these things have generally played out, we can see in the gray is the S&P Global one, and it is a little bit higher, but it's also a little bit more volatile. And so it swings around the core kind of numbers out of the government itself, the national business the National Bureau of Statistics, rather, and CFLP, the China Federation for Logistics and Purchasing. They put this together. That one is telling you we're basically hugging the 50 line, and the S&P Global numbers, they're overshooting, but that isn't anything they haven't done before, and they tend to re-anchor back on the government numbers thereafter. So it seems like the story for China's economy still is of deflationary drift, and not really anything going on there where if the U.S. economy were to stumble, one could turn and say, well, not to worry, we have a backup in China. We do not. The other piece of news here, the Reserve Bank of Australia had rates unchanged as expected at 3.6%. The Aussie dollar rallied on this a little bit because the language coming out of the RBA was ever so slightly hawkish flavored. The RBA saying that the decline in underlying inflation has slowed, and that inflation in the September quarter may be higher than earlier expected, though they don't seem to be terribly worried about tariffs. They seem to think that extreme outcomes are likely to be avoided, though uncertainty is still elevated, and they'll be data dependent. So not really a major news there. But the interesting bit is that they seem to be saying that because inflation, because disinflation, the decline in inflation, has slowed, and because the September quarter is likely to give us inflation that's hotter than anticipated, there might be less scope for RBA easing. And not surprisingly, the Aussie is the best performing currency against the dollar today, whereas the euro is flat, the pound is only up about 0.1%, The Canadian dollar is flat. The franc is down a little, about 0.25%. It is the Aussie with a gain of 0.6% that's easily outperforming. The yen is not far behind. It's up about 0.5%. But the Aussie clearly out in front here, and that's largely thanks to a little bit of an extra push from the RBA. Now, U.S. economic data. The next piece of evidence that we're going to get here in these markets that are still seeming to be obsessed with what the disconnect is between the Fed and markets about rates, and obsessed with it not because they think that the Fed is going to do this or that to change the economic trajectory, but more so seemingly on sentiment grounds, because the markets want cheaper money as a bulwark against the gathering risks, which of course are clearly on display in surging gold and silver, and surging gold and silver outside of the normal channels. Gold and silver aren't surging because the markets think the Fed is dovish. Note the dollar has been recovering since the last Fed meeting. Yields are up since the last Fed meeting. These should be kryptonite for gold and silver. Metals that are naturally anti-fiat and don't yield anything. And yet, gold and silver are surging even as yields go up, even as the dollar attempts to rebound. And that seems to be mainly about uncertainty. And the idea that all manner of things, like the Supreme Court perhaps ruling against IEEPA justified tariffs, which is the bulk of tariffs that have been taken and put forward by the administration. Maybe the Supreme Court ruling against the administration on firing Fed Governor Lisa Cook and telling the president he can't do that. Maybe there being government shutdown, let's say. All of these things throw an established view of what's going on into flux. And when money is going to be cheaper down road, any amount of flux is that much more digestible. Because if something goes wrong and you lose some money, well, then it's cheaper to borrow back and go again. But if the Fed is not going to make money as cheap as the markets want them to make it, well, then the bulwark isn't as strong as the markets hope. And that can be a sentiment blocker, as it were. And so with that, we look at this ISM data because this disconnect between the Fed and markets is going to get informed by this. The expectation, of course, is that the service sector is going to continue to power ahead. Positive growth expected there at 52. That would be the same as what we got last month. And, of course, that in turn was a 6-month high. So relatively chipper here on the expectations for the service sector. We get another contraction on the manufacturing side expected, but the pace is seen easing. So we're kind of inching back in the direction of 50. 49.2 would be the most kind of narrow contraction since February, where we saw a tiny sliver of growth since here, essentially. And so what we then have on the menu here, considering services are a much bigger part of the economy than is manufacturing, basically a composite index implied near 50, so near standstill. When you consider that there's more weight behind that 52, give or take, than there is behind the 49. So we're probably hovering somewhere in the low 50s for a kind of scaled composite index. Now, the most interesting thing, of course, for markets is going to be the interplay between employment and inflation that's baked into these numbers. And when we look at the employment sub-indexes, we can see employment has been shrinking really since the beginning of the year for both manufacturing and for services. Both of these readings are below 50. Meanwhile, on the prices side of things still look very elevated, especially for services, which is the biggest part of the economy. We're still looking at reference points that are more than 3 years back as far as how long it's been since we've seen inflation like this, even though on manufacturing we've pulled back a little. And so this is really the essence of the Fed's conundrum. There is inflation, and the labor markets clearly are weakening. The Fed has, of course, come around to this idea now, but the ISM numbers have been showing us this for quite a while. And this is where the disconnect between the markets and the Fed is so important. Because if we look at what the markets have baked in going into these numbers, we can see that they are of the view that we don't need to worry about inflation. Because if we look at what's priced in for next year, we can see the markets have 61 basis points. That's at least 2 rate cuts. That's 50 basis points. And 11 basis points in the direction of a third, which essentially gives us about a 44% chance that we're going to get that third cut. So, needless to say that even with this recent unwinding of dovish Fed policy expectations, in excess of just the 25 basis point cut that we just saw this month, obviously we can see that there's an impact on this from rates having shifted against that baseline. But also, if we take a look at where this has moved from 140 basis points being baked in at the on the eve of the Fed policy announcement, let's say, and now 97 basis points being there, that's a difference of 43 basis points, clearly in excess of just the 25 basis point cut. So we've adjusted by about 18 basis points toward a less dovish view in markets. Nevertheless, this is still a significant skew. 61 basis points is a far cry from what the Fed was projecting just about 2 weeks ago, which is a single rate cut. From 3.6 to 3.4 is one cut next year. And so obviously there is a big disconnect there. And if the markets are weighing kind of what the Fed is looking at here and saying, we're going to prioritize this side of the equation now because this side of the equation seems to be contained, the Fed is saying, yeah, well, not so fast. We're not quite ready to jettison this side of it with the same abandon that you all are. And so what the market is seemingly set up for here is an interesting sort of thing where it's almost hoping for weak data, because that would validate what's still there in Fed funds futures relative to what the Fed itself is seeing. And that's going to be very, very important, especially if we don't get other key pieces of U.S. economic data this week, especially the BLS jobs report, because of some government shutdown shenanigans. So leading into this, the S&P global version of the data has given us 3 months of slowdown, mainly following a cooling off in the service sector, but still relatively well-anchored growth, well within the range that's emerged since kind of the post-COVID normalization in growth rates. There was obviously a massive catch-up in 2020 going into 2021. 21. By mid-year, we topped out at these very aggressive readings because the economy was racing so fast to rebuild from those lockdowns. Since then, we've had a kind of moderation. We found a new baseline, and we're very much within that baseline here. However, if we get some sort of data that tells the markets, oh, well, actually, this is going to be something that tells the Fed they are in a position to do fewer cuts, not more of them, if the numbers give us more inflation, if the overall headline for ISM surprise is higher with faster growth, well, then that might actually be bad news for markets. And interestingly, looking at this City Economic Surprise Index, at the very least, that suggests we may, in fact, be going that way. We may get hotter data here. And if we do, then what the Fed is saying here in upgrading its growth expectations and inflation expectations and downgrading its unemployment expectations and only giving us very modest rate cuts, that the Fed is going to exert a kind of magnetism on markets to adjust. And we can see that as we've had this move to a less dovish setting, stocks have stalled. And as we have had it, we've also found a bottom seemingly on the US dollar, which had been selling off amid dovish speculation since the beginning of the year. So if we do in fact get ISM data that follows this dynamic, ends up looking hotter, and ends up diluting Fed rate cut bets, then perhaps it is weaker stocks and a stronger dollar that result. Positioning wise, that's sort of what I am aiming for here. I'm long the dollar still against a basket of currencies: Aussie, pound, euro, and the Canadian dollar. On the spot side of things, I'm also short the yen and short the Singapore dollar to boot. I am also a little bit short stocks here in a very kind of modest, risk-defined way, and I'm still long silver, which is the train that keeps on rolling, and I'm going to be holding on for dear life for as long as I can. Still long the bonds a little bit as well with a little call vertical. That's starting to maybe work a little, but it's early days yet, so we'll see how that plays out. My sense is that if rate cuts get delayed now, they'll get pushed deeper along the maturity curve and end up in the long end, which is how you might start to see the curve twist and end up with higher bonds and lower rates at the long end, even though the Fed is keeping the front end of the yield spectrum elevated if they don't cut by as much as the markets think. And that is Macro Money for today. As ever, we are here right after overtime, Monday through Thursday. That's a show I co-host with Dylan Radigan and Chris Vecchio, usually, looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week. with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. And with me today, of course, fellow cave members, Dan Cecilia and Shelly Van. Though it's a little lonely here in the cave in the studio. We got you guys both dialing in remote here. How are you?
Doing well. Dad, new father in the house.
Yeah, I'm back.
In the cave.
I'm back. Thank you. Thank you for that. And thank you for the very sweet gifts that you guys both gave me yesterday. We got some baby swag, specifically some crypto swag. I don't know if everybody saw that on the Tasty Crypto Instagram, but get over there, follow us on Instagram. And yeah, it was very nice of you guys to give me a gift. So thank you.
Oh, you're very welcome.
I really like the dad beard. I think the dad beard is a interesting and very fitting new look.
Interesting is a good word, Dan. Fitting, I'm not quite sure.
It's a playoff beard. It's a playoff beard.
Yeah, that's a good way to think about it. I took a break, as everybody knows, I think if they've watched the Tasty Crypto Show for a few weeks here, and just really let myself go. As you can see, we'll see how long this all lasts, but it's good to be back here, guys. It's Crypto Week. We've got a lot to talk about. There have been a ton of updates to the Tasty Trade crypto product offering, to the platform, some new features. We even have some new tokens that were literally just added. I think like Saul just hit us up on Slack like a couple of minutes ago. So we're gonna test the trades live. They should go through. We're gonna do it live, right? But a lot to talk about here. Before we jump into it, what else is going on with you guys? What are you seeing in the market? How are you thinking about things? And shout out to the chat too. Gary, the gray hair is already here. But if you're not streaming on YouTube, get over there and type some crazy shit into the chat. Join us.
We got
on X.
We do have a few of the Tasty Crypto members over here. TC token members. What's up, Mike? What's up, Gary? What's up, Dave? Dave Martinez is here.
Talk to me for a second about the Tasty Crypto token. I've been away for a while. I know you guys did this live, as we do, well over a month ago or so, through the Bags app, just kind of randomly, spontaneously launched a Tasty Crypto show related, I don't know, how is this, a party token? What do we call this? How do we think about it?
Content token.
Content token. Yeah. Okay, that's the word I was looking for. Yeah.
It could be a party token.
I do like party token. You can
I
redeem
like the
it for
idea
party
of party
favors.
token.
Yeah.
But you can, we've just been using it as sort of our content token. People in the community can hold it. We've been showing people how to deploy in DeFi. So we were doing some liquidity pools with it. It's verified across all major dexes on Solana, and we have a few other things in the pipeline that we're working on, but we're going to keep it on the down low.
How does one, if they're not familiar, how do they find out more about this? I think you guys launched it on Beans. Is that the best place to go to learn more?
Yeah, we're a lot of information is in our Tasty Crypto community on X, and the contract address is in our profile. It is a Solana token. And jump in the Discord.
I could drop the link to the Jupiter aggregator too, if anybody wants to take a look and just watch, see the chart of it as well.
Yeah, pop it in the chat, Dan. I full disclosure, I do own a little bit of this because when you guys first did this, I of course had to ape in. I just haven't looked at it in a while.
While you were gone, it did reach 170,000 market cap.
No way.
It did. Yeah, we it's right now it's at 75,000 market cap.
Okay.
75,000 fully diluted value, but we need to get some more. We're working on a few things. Let's just leave it at that. Yeah.
Wow. Okay. Yeah. I think when I first was joining you in this endeavor, it was like a $40,000 market cap. So, well, nice job. Good work, guys.
We'll see where it ends up.
Awesome. If you want to check that out, Dan's gonna pop the link into the chat and make sure to tune into Beans every Friday. Let's do this, guys. It's the Crypto Week special. So if you have been watching Tasty Live, you've seen Dan and hopefully you see Shelly soon here, myself, on a handful of different shows, as I mentioned earlier, talking about some of the new updates to the platform, to the crypto product offering. We've got some slides that we'll throw up just kind of as a background, and then we'll jump into the platform. We're going to do a bit of a live demo and test product in real time as well. Where do you guys want to start? We've got 4 topics that I want to just hit on and kick it over to you to speak to as well. We've got some new tokens that we've added to the platform. If anybody has a request for others that they'd like to see, they'd like to trade, let us know. We'll do what we can to get those listed. We've got an update to our stablecoin funding mechanism. You can now withdraw stablecoins. Recurring crypto purchases have launched recently. And we've got transfer functionality for a couple more tokens, a couple more assets, which I'm really excited about. Where do you guys want to start?
I vote for the new tokens.
All right, let's do it. We're going to test these live. So 3 new tokens have, as I said minutes ago, been added to the platform. I don't think they're on the crypto watch list just yet. We'll take a look. I think we might manually have to update that. But we've added the basic attention token, which is BAT. We've added Uniswap, which I'm really excited about. And we've added Arbitrum, which is an Ethereum Layer 2 scaling solution, or Ethereum L2 network. ARB, ARB is the symbol. So 3 new tokens. Over to you guys. Any preference when you think about these, whether it's from like an investment or trading perspective? What stands out to you?
I mean, I personally think Uniswap is a really compelling token. I'm really happy we added it. If people aren't familiar, it's a decentralized finance exchange on basically ETH and all the major ETH layer 2s, right? And if you look into it, people always ask, is there fundamentals? How do I value this? It's crypto. Like, this is an application that does billions of dollars of volume each day and generates revenue for token holders. Although there's a nuance there because it's not being passed on currently to token holders. So you can play, you're kind of betting for that fee switch, as they call it, to be turned on. So the protocol, the exchange makes money. It generates revenue. It's one of the most successful apps launched in crypto. But right now, the money's not flowing back to the token. So people are kind of playing for that fee switch. So, I think that one has a lot of upside. Definitely one I would be paying attention to. So that's kind of my 2 cents on the one that I'm excited about. I don't know, Shelly, you got anything?
I also love trading Uniswap because I just like trading the volatility. Like, if you can pull 1% a day, it's a fun trade. And I'm fairly confident it's not going to 0. So if I have to wait more than a day, I'm all good. But yeah, Uniswap is awesome.
Yeah, I'm with both of you guys here. I own a little bit of Arbitrum. I own some Uniswap as well. We'll add that to my Tasty Trade portfolio of crypto. I don't own any BAT. I did a long time ago, and that's a utility token that's associated with the Brave browser and what they're doing, which is kind of unique from an advertising perspective, if anyone's familiar. We'll cover these in more detail on future shows, maybe do a little bit more of a deep dive. But yeah, I'm with you guys. I mean, I think, just offering Uniswap, you look at that from the investment perspective, you've got possibly a tailwind from a regulatory standpoint, right? If we get some clear rules and regulations that these DeFi protocols can abide by, especially these US-based companies like Uniswap, which, as you mentioned, Dan, one of the biggest, if not the biggest, decentralized exchanges. It's been around, I think, since it launched in 2018 or so, and generates billions of dollars annually in fee revenue, which is passed on to those that are providing liquidity for the decentralized exchange. We've done a ton on this. We have covered how to use it, how to create liquidity pools. We've talked about it, previously here on the show, and we've used the Tasty Crypto wallet to access it. So if anybody's interested in this, go check that out on the Tasty Crypto YouTube channel. But we'll definitely cover it in more detail going forward. But I'm excited about it as well. Guys, let's jump into the platform, and we're going to test whether or not the order routing, which I'm fairly confident is working. But let's just jump in here. And for anybody that's not familiar with this, you do need to search for a crypto symbol by typing in the symbol and then just /USD as it's denominated in dollars. It's just how our system is set up. But I previously searched for Uniswap. You can see the little unicorn logo there on the screen. If I click on this, I'm going to get a chart. Current price of about a little bit under $8, almost $7.50. And as everybody knows, a couple different ways that you can place orders in here. You can do a limit order, you can do a dollar market order, or just a straight market order. But let's just let's just buy a little bit of this. I'm gonna buy $25 to start with because I do like this. Let's see if this works. Hopefully it works. If not, we'll let our development team know before they leave for the day. So boom, filled. We own a little bit of Uniswap. Good to see that that's working, and we will get this on the watch list. So just to show everybody where that is really quickly, crypto watch list. This is where I go to every day, and you'll see some of these on the live from the trade desk on tastylive. But you can easily just kind of filter this or sort this to see what's up the most, what's down the most if you're looking to buy the dip, that sort of thing. And we'll get these on here as well. But a couple others, let's just pump them in really quickly. We'll buy some Arbitrum. That's ARB/USD. There you go. Go back over to our trade tab, and we're going to
just a note when searching, Ryan, if you, in the search bar, if you click on the little crypto button within that bar and you search, it'll pull it up. You don't have to do the /USD that way.
Oh, I learn something new every day. Thank you, Shelly, for that. That's a pro tip right there.
Shelly's the most experienced on the platform, so she uses it every day, and it trades options pretty regularly. So
yeah, you know what, Dan, I do to that point. I walk and, obviously I'm going to the kitchen to get some sweet treats. It is, I did overhear somebody say it's sweet treat season, which hell yeah, it's sweet treat season. But at Tasty Trade, there's always candy in the kitchen. So I always go to get some candy. And yeah, Shelly's got like the best setup. Like
I know
all the charts, multi-chart view, just trading nonstop. I love it. I love to see it.
She is a multi-chart wizard.
I love that multi-chart feature. It's my favorite.
Let me,
for sure.
You know what? In just a second, let me jump over there. We're going to buy $25 worth of BAT. So we just spent all the money that I have here on BAT. Okay, this one is not going through yet. So we'll have to let the team know. I don't know if I did something wrong there, but yeah, Uniswap Arbitrum, real time testing out the product here, and we'll just double check on what's going on with BAT. Let me see. Maybe we'll go one more time and just see here. No. Okay. We'll let them know. Anyways, let's jump over to the charts really quickly and show everybody how you can get this to look, I guess, like a professional's does when Shelly's got it up on the screen. Multi-chart. And this is the setup that I quite often see you with, I think, Shelly, where you've got them all over the place. And you can go in here and you can set up different symbols. You can use the same symbol in different time frames. And this is probably not the best view or monitor for this look. But you can change this so that you can see, 4 at a time. You can see 1 at a time, whatever you want to do. It's really nice to be able to customize this and set this up. All that said, how do I get out of this?
You can just change it back to 1.
Yeah, how do I do that?
So let's see. Click on I can't see your screen.
Click on the multi-chart tab, and then you just go back to chart layout.
Oh yeah, it's over there on the left, isn't it?
Well,
or maybe not.
You can do it on any. So just click. Oh.
Yeah, I broke the system. We'll fix this later on. Let's keep it going though, guys. So 3 new tokens, 2 new tokens. We'll get BAT worked out here in just a second. But Arbitrum, Uniswap again, which we're excited about. But keeping it moving for Crypto Week, another new addition has been the ability to withdraw stablecoins. So if you're not familiar, about 2 months ago or so, we launched stablecoin funding, which has been a smashing success here at the brokerage. I think we're one of the few brokerages out there that allow you to fund your account with stablecoins. If you have stablecoins, whether it's through DeFi or you've accessed them through Binance, Coinbase, another exchange, etc., and you want to fund your account with stablecoins, you can do this. It's immediately, instantly available 24/7, which I love. So you need to meet a margin call. Hopefully you don't, but instantly available. You want to trade crypto over the weekend. You don't have any cash in your account. You want to take advantage of volatility when the futures market opens on Sunday night. You can deposit money, and that buying power, if you deposit via stablecoin, is going to be available instantly. And that's through the USDC stablecoin, US dollar Tether from Tether, USDT, the Ripple Ledger, US dollar, as well as PayPal stablecoin, PYUSD. I'm guessing you guys use, like I do, USDC mostly.
Yep.
I use USDT and USDC. It depends on what I'm doing. USDT usually has deeper markets if you're trading on different exchanges.
Yeah, I knew Dan was a Tether guy. Shelly, I just had a feeling.
I mean, it's the most liquid. It's the most liquid. It's the most accepted. Come on.
He gives Tether vibes.
Hey, not that that's a bad thing. You know what else I've also seen is a lot of headlines recently around just an increase in the market cap of PYUSD, the usage, the adoption of PYUSD. So not surprised to see, a massive platform like PayPal starting to have some success now with their PYUSD stablecoin as well. And I'm sure at some point too, you'll see increased adoption of Ripple Ledger. But I think from like the retail perspective, there's probably less usage of that. Maybe just speaking from my own perspective. So you can fund with stablecoin. You can now withdraw stablecoin too if you want to stay on chain. You can just move your money out and keep it in stablecoins. There is an associated conversion fee with that of 30 basis points. But let's show everybody how to do it. What do you think?
Let's do it.
Mm-hmm.
All right, back to the platform, I guess staying in the platform here. I'm going to jump over to the Manage tab, and you can do this on both the web app or the web trading platform, which is what you're seeing here on the screen, or you can do this on mobile. We've got a completely redesigned mobile crypto interface that came out, I think, back in March. We're making some additional changes to that platform and to the order ticket in there too. So you should see that come out this week as well. We'll talk about it on air when it does. But if you want to fund with stablecoin, just click on Manage here on the web platform, click on My Money, and then you've got both deposits and withdrawals. If you want to deposit, you'll see stablecoin as one of your choices. You'll see the same thing for withdrawals. Click on deposit, and this will let you start that deposit. So when you do that, you're going to get a little modal that pops up. It's going to have a little bit of information about stablecoin transfers here and depositing stablecoins. Then once you click continue, you'll select the stablecoin that you want to deposit. So make sure that when you select the stablecoin, you're also selecting, the one that you have, first of all. And then second of all, make sure that you're selecting the network that it's on. So if you have USDC on Base, for example, you want to make sure that you're transferring it on Base. We can help to recover it, but there's just some technical friction that's associated with sending it to the wrong network on Ethereum. If you try to do this on a different network, in some cases, it could be irrecoverable. So just again, as always, make sure whether you're transferring any asset that you're transferring it to the right address and you're doing it on the correct network. But as soon as you do this, you confirm what I just said, and then you go through the process, enter in the address, or you scan the wallet code here, and it's as easy as that. Then I think within seconds, it's pretty much available, and you can trade.
Yeah, it's a great feature. It's probably one of our more popular, successful feature launches that we've been together releasing. A lot of a lot of people will contact me and say like, "Oh, Tasty has stable coins now." So, easy way to transfer it, especially if you're trying to trade over the weekend or get your account funded before the market opens, Monday. So, yeah.
Or if you're in a different country, super
Yeah,
easy.
I think we've seen the most international clients, really.
Yeah, that's a great point, Shelly. This is super useful, efficient for anybody that's outside the United States. If, again, you have to have stable coins, but let's say you have an account with Binance or you're with another crypto exchange, you have access to stable coins. It's becoming, more and more common by the day. Obviously, we've had recent legislation passed here in the U.S. that just further accelerates all of this adoption. But you don't have to deal with the currency conversion. There is a stablecoin conversion fee. I think you're going to see those fees come down over time. But you don't have to deal with the process of waiting for this to settle, even with a wire, right? It's going to have an associated fee. It's not immediate. A lot of people think like wires, like instantaneous. It's not. It could be a day. It could be 5 days. And there's nothing wrong with some of the instant payments that do exist. You get instant buying power up to a certain amount if you have a linked bank account, if you're a U.S. user. But for anybody that's outside the U.S., this is probably one of the easiest and most convenient ways, again, assuming you have access to stablecoins, to just deposit. And to your point, we've certainly seen quite an uptake there. I'm honestly surprised at how popular this has been since it's launched. I'm excited about it, but pleasantly surprised at the same time. So we've covered new tokens. We've talked about stablecoin funding and more recently the ability to withdraw stablecoins here in the platform. Like I said, just click on withdrawals and you'll see the same stablecoin button and you'll go through the same process with the modal. Let's talk about recurring purchases, dollar cost averaging. Do you guys have any recurring purchases set up?
Oh, yeah.
Yes, that's the
I knew
feature
you
I
did,
use the
Shelley.
most.
What, when you guys, how do you think about this? Is it something where it's just convenient, or do you really use it from kind of that angle of, I want to eliminate some of the volatility of my purchase price over time? Or is it just convenient?
A little bit of both.
All.
Yeah. And especially for an asset like Bitcoin where I'm long-term bullish, I just want to make sure that I'm accumulating it regularly.
Yeah, that's the way that I've set this up as well. I probably should set it up for a couple more tokens, but right now I think I'm buying like $50 of Bitcoin every week or every month. I'll have to double check what it is. But yeah, it's kind of nice. Like, it just happens in the background. It's a good way to passively, in my opinion, it's a good way to passively just invest if this is what you want to do. I'm with you guys. I think we're higher at some point over time. And you look at it after a couple of months, like, oh, okay, I've got a couple $100 more of Bitcoin in there that, kind of just runs automatically, which is nice.
Yeah, I definitely think the majors, Bitcoin, ETH, Solana, I think it's useful for that, right? Like, my narrative or my thesis is Bitcoin is digital gold, trades as a form of digital gold. Like, I'll just accumulate it weekly, monthly, whatever. Don't really need to look at it too much. I have been using it for other tokens though. Personally, Aave and Link are two that I'm trying to accumulate, just because I know those are two tokens that again are pretty well known, pretty well used, have revenue, have a ton of integrations, both in TradFi and DeFi, crypto specific. So I have no problem kind of automating those purchases as well. So that's the most used feature I have personally on the platform is recurring purchases.
Well, let's take a look really quickly at how to set this up before we wrap things up. I know we're kind of running up against the clock here. But if you're interested in setting up a recurring purchase like Dan, Shelley, and I all have, you can go in here to the web-based trading platform. I don't believe that this is on the mobile app just yet, but it will be coming soon to the other platforms. And here on the web, if you click on Invest, which you can see is over here on the left-hand side, just underneath that watch list button, click on Invest. And man, I wish I could figure out how to change my charts. I'm sure there's a button I'm just overlooking here, or it's like I've got to widen out the screen or something. But that said, once you go over here, you'll see that you've got the ability on the right-hand side of the screen to create a recurring investment. And so you can search for any crypto token. It's limited to crypto right now, but the team is hard at work on opening this up to all equities, or the majority of equities, I should say. But if I want to just put on that recurring investment for Bitcoin, I can go in here, I can set a dollar amount, I can set the frequency. So you have the ability right now to do this weekly, bi-weekly, or on a monthly basis. Set your start date, choose the account that you want to make this recurring purchase in, and then you can choose your funding method. And so what this allows you to do is either just tap into your buying power, which for anybody that's not in a margin call, has available buying power, this is probably the way that you're going to want to do it. But if you don't have any buying power, or you just want to ensure that this doesn't get paused, just set it up so that's your bank account. And then what this will do is it'll just draw or make a deposit from your bank, if you have a linked bank account, to make the purchase. So it just ensures that you can keep this thing running smoothly if you want to make those recurring purchases, read the disclaimer, and then hit review recurring investment, and just route this in the same exact way that you would, a traditional trade or an order. And then once you have that set up, you'll see your recurring investments down here. You can manage these as well. So you can edit them, you can change the frequency, you can change the amount, you can pause them if you want to take a break from investing in a particular token, or if you want to just cancel it outright, you can do that right there. You just click on that little menu button. But again, on the Invest tab, very easy to do this. You'll see this over here, search for the symbol, and then you can set this up, set up the frequency and the amount of that token you want to buy on a recurring basis. So that's how you guys do that. That's how we do that as well. One last thing that I want to talk about before we wrap things up, guys. This has been a really heavily requested feature from a lot of people, and that's the ability to transfer XRP. So finally, I know XRP is a very popular token. When we look at trading volumes at Tasty Trade, it's top 3 for the most part on a monthly basis, just behind Bitcoin and ETH. We haven't been able to support transfers. So if you own XRP, you haven't been able to move it to Tasty Trade. If you've bought it here, you haven't been able to move it out if you want to. Now you can. So this should be live this afternoon. Like I said, we've got to check with our development team here. If it's not live already, when you go to cryptocurrency transfers on that Manage tab here in the web-based platform, it will be this week. But we're launching XRP transfers, also launching XLM, Stellar Lumens transfers. But I think what most people are probably excited about here is the ability to transfer XRP. So just wanted to hit on that before we wrap things up. I know we've run over. Apologies to the production team here. But XRP transfers are here, my friends.
Mm-hmm.
That's a big one. That is a massive one. The Ripple army is pretty strong.
Big army.
Big army. Yeah. I don't know how they're going to react to Swift announcing that they're doing their own chain, but we'll see. But we'll see. We'll see how that goes.
A little competition from the traditional financial system, I suppose.
Yeah.
Awesome. Well, guys, thanks for joining me here on the show. This is a special edition of the Tasty Crypto Show because it's a Tuesday. Normally the show is just on a Monday and Wednesday. We will be back again tomorrow. And then also Shelly and I will do another special edition of the show on Thursday. I think Dan is off. You're going to go get married or something, right?
I am going to get married for sure.
Congratulations to you, my friend.
Thank you. Thank you.
So we've got more Tasty Crypto coming at you all week. Tune in tomorrow, same time, same place. But until then, I'm Ryan.
I'm Shelly.
Dan.
Peace.